With FOMC in just under 48 hours, the big question on everyone's mind is this the end of the current uptrend for Bitcoin or just another healthy correction? These are questions we're going to go ahead and answer today in the video, so stick around until the end. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you all have a wonderful day today. We're here to take a look at Bitcoin on the smaller time frame and of course on the daily chart. We're going to be discussing the daily and small time frame trend. We're going to be running a trend-based analysis and a technical analysis to discuss the next move for Bitcoin, the current price action, our lower targets, and the possibility for a bounce. While we do that, we'll also go over the market data, economic data, and so much more. Before we get into it, guys, smash the like button. It supports the video. Smash the comment button and leave a question if you do have any. And of course, subscribe to the channel, guys. We do daily videos for Bitcoin focusing on charts, TA, structural analysis, data, education, no BS, no hype, pure raw TA. If that is what you're interested in, this is the channel to follow. You can also find us on Telegram. It is going to be the second link down below. You'll get access to more of that kind of content. You'll get access to charts, updates, analysis, news events, videos, information, and educational posts, guys. We post in here every single day. We post only the most relevant and important updates you need for navigation of this market. Now, if you're interested in joining our VIP, where you'll get access to trading signals, and of course, you'll get access to two groups, our group chat and our main VIP channel. You can find all membership information here and our entire trading track record if you click this link. Let's go ahead, guys, and get dived right into the video, starting off the market data, of course. So currently, how are we looking for the month? Let's go ahead and refresh this page. We can see for the month, we are currently down 4.11%. The classic saying, guys, sell in May and go away. Is it going to come true? Is it not? We'll find out soon enough. But 4.11%, of course, it's a decent pullback for Bitcoin considering we're only 2 days into a month. And of course, with this pullback, we have seen volume drop. We have seen liquidations drop in the last 24 hours. Liquidations are down 50% to 65 million, and 24-hour volume is down to 70 billion, down around 8.34%. Again, none of these numbers are by any means small. 65 million liquidations, still very high. $70 billion in volume, still very high. But since we had such an aggressive, volatile day yesterday with the monthly open, we have seen now a little bit more compression. We'll show you that in the charts. And with compression, we see reduction in volatility, we see reduction in volume, and we see reduction in liquidations. Moving on, guys, to the volatility index for the 30-day period, we're seeing at 2.15. Again, as expected, we expected the volatility index to rise as we started accounting for the rapid drop in volatility we had during the periods from around the 1st to 1st of April, that 1 month period. We're starting to push through that stagnation period. We're starting to account for these higher volatility periods, and thus the volatility index is rising. For the 60-day volatility index, we are starting to see a little bit of a slow grind upwards, seeing a 2.91. Again, volatility, momentum, liquidity, volume, they kind of all mix and match and go hand in hand. You can equate one from finding out the others, and if you know one, you can equate the other. It's like an algebraic equation. If you have the volume and you have the momentum, you can derive the volatility. If you have the liquidation data and you have the volume, you can derive the momentum, etc., etc. They go hand in hand. Let's go ahead, guys, and get into the broad market. So DXY is over here, holding strong, doing quite well, guys. Not too much we're looking at on the chart over here besides what we've been looking at for the last few days. We do have, of course, a potential local bottom as support over here. This is a 1 year long trend line. As you would know, the longer the trend line, the stronger the support. This is sitting at just over a year. We're looking at around 373 days. As you would know, strong support becomes stronger resistance. As well, strong support on the horizontal level or strong resistance act as major directional triggers for price action. Meaning, if we do manage to break below 100.8, we are going to see a strong continuation toward the downside. How low can we go? Well, we'll be looking at its next liquidity zone around about this range at 99 to around 98. So a pretty significant crash there for the DXY if we do actually drop below this level. On the flip side, guys, until we drop below that level, the DXY is technically consolidating, and it is technically in a bullish consolidation. because we do have compression after an aggressive downtrend. If we do break over this downtrending resistance, we will officially be in an uptrend on the daily. Until then, guys, we are technically still in an overall downtrend. If the DXY happens to break this resistance, we are going to see a very red month for Bitcoin, for traditional markets. We're going to see a little bit of pain, okay? The markets will correct, and most likely correct for the entire month if we see a DXY break over that level. If the DXY breaks down, we're going to see the opposite. We're going to see the markets rally. We're going to see Bitcoin rally. We're going to see Bitcoin break over 30,000. We're going to see the traditional markets break their yearly long resistances. We'll see a lot of green. Now, a lot of what will determine which way the DXY goes will be solely on the basis of FOMC. Interest rates completely and utterly determine the strength of the dollar, okay? The strength of the dollar is based on the cost of debt, okay? That's one of the main things. And interest rates determine the cost of debt. They tell us how much debt costs. And of course, if the cost of debt drops, the cost of a dollar decreases, okay? The cost of assets rise in comparison to the dollar. We have an increase in price for assets, we have a decrease in price for the dollar, and of course if the dollar decreases in value and decreases in strength, the DXY pulls back. So if interest rates come out and we have a positive result will be a pause, so 0, or again 0.25, we will most likely see the DXY fall, and we will most likely see the markets rally. If we come out of 50, okay, 50 basis points, we're going to see absolute carnage. The markets are going to crash. Here is another thing. If we see 50, we're going to see blood. If we see 0, we're going to see absolute strength. If we see 25, we are most likely sitting on the fence until the speech. The Jerome Powell speech, the Fed speech, will determine the direction in which the markets will go based on the expected future rate hikes coming after, of course, this coming up rate high, okay? Because the markets moved on systematic risk. More importantly, they moved on perceived systematic risk. So if we do get 25, but then the speech, they announce that they're going to continue 25 with no kind of like pivot point in sight, no point in which they're going to slow down and pause rates. They don't announce that. The market's going to take that as pretty risky. The market's going to perceive that as the systematic risk has now, the narrative is flipped and the systematic risk has increased. However, if we do get 25 basis points and the speech occurs, in the speech they say we're going to have 1 or 2 more periods of interest rate hikes of 25 and then we're pausing, then the market's going to react very bullish, because that is going to be a perceived shift in systematic risk in connection, or should I say in correlation with the narrative that they're pushing, which is a pivot is coming soon, and they can't really go any higher than 25. If we go 50, it's going to be an absolute curveball, because banks are failing. Of course, they've been printing money again. Going 50 is going to be completely contradictory to their actions. And again, what I say, watch what they do, not what they say. Very important stuff. Let's go ahead and get into Bitcoin, guys, after we talk about these. So S&P 500, like we said, at major resistance, watching these points over here. S&P 500 and Dow Jones generally lags compared to Bitcoin. So again, we are at resistance here. We can't expect the pullback unless the DXY breaks upwards. Same goes for the Dow Jones over here. If we do break upwards, we can expect a pretty strong move upwards to these next resistance zones. Of course, if we don't, we can expect a extended rejection during this month if the DXY drops up, breaks upwards towards this uptrending support. So watch these trend lines, watch this dotted line, watch this solid line, guys. Let's go ahead and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. As you would know, Bitcoin has seen a pretty aggressive pullback on that monthly open, as we did not close a monthly candle above 30,000. 30,000 being an absolutely significant level. We're not going to get into why so much today, which we talk about a fair bit, but really, really quickly, 30,000 is the horizontal trigger point that would trigger the trend flipping from a daily / weekly uptrend into a monthly / macro uptrend. So it is the horizontal price point in which would trigger the confirmation of a macro uptrend. We have technical indicators that suggest a lot of strength on macro. We'll talk about those in a second, but technical indicators are second when it comes to price action charts. We need to be looking at structural levels. We need to look at structural supports, volume ranges. Those will determine where the price is going. The technical indicators just reflect the strength of the trend. And if we've had a 2 or 3 month period of aggressive uptrend, which we have, of course the technical indicators are going to be suggesting that the trend is incredibly strong, because it is. But a strong trend in reflection doesn't necessarily mean the trend is going to continue. That is when we need to use structural levels. So I've been saying for a very long time, we bought at 16,500 to 18,000. We bought in this range over here, guys. When everyone was saying 10,000, we bought. And we sold at 30,000. When everyone was saying, we're going to the moon, whale, don't sell, you're an idiot, you're not going to make a good profit if you sell here, you're going to rebuy. We have now dropped 2,000. Watch what I do, watch what I do, and watch what I say, guys. Very important stuff. I'm not just making this stuff off the top of my head. We are trading proper volume ranges. We are trading historical levels. We are trading based on accurate and efficient risk return, and we are making the best decisions possible with the data we have available. We're not just making stuff up as we go. So currently, Bitcoin has rejected. Perfect, great for us. We've sold our spot at 30,000. We've come down to 28,000. As you would know, the $30,000 resistance is not a static resistance. It is a resistance range. And that resistance range spreads between 30,000 and 28,000. So we actually have a resistance range over here, and we are currently retesting the lower segment, or the lower support of the current resistance range. You can see on the VIPV, we have a significant jump or a significant spike around 28,000. You can see if we lose 28,000, we have a drop in the VIPV, which takes us all the way down to around 25 and a little divot around 26. If we break back above 28,000, this 28,000 range, we start dropping again in the volume range over here. Again, suggests an area of lower resistance here, an area of lower resistance here, and an area of higher resistance at 28. So it's only natural we start to get a bit of compression, a bit of consolidation at this range after what was quite a volatile move downwards. We'll talk about in today what will trigger the next move down, but I want to talk about this really quickly and discuss the overall trend. So a lot of people are saying, we're going to new lows or we're going to new highs. It's very much give and take in the market. It's very much pull and push. And we've been saying this the entire time. We are in a uptrend. We are in a uptrend, unrefutable uptrend. We have been in an uptrend ever since we broke out of this falling wedge structure, which is a bullish reversal pattern on the macro. We have been in an uptrend. This uptrend, however, is still intact, but it is significantly weakening, and it is going to continue to weaken until it cracks if we do not get back above our key short-term trigger levels, which we'll talk about in the short-term analysis in just a moment. Let's take a look at this uptrend. Currently, we can use 2 indicators to define the strength of a trend. What I'll be using on the daily chart is the 50 EMA, represented by this red line, and the Gaussian channel, represented by this red and green channel with a middle, lower, and upper band. As you can see, we are approaching / entering the Gaussian channel from the top side down. Every single time we enter the Gaussian channel from the top side down, it is an indication of weakness in the trend. This over here is an indication of weakness. We pushed up, we created a lower high, okay? Indication of weakness. We have bearish divergences, okay? Not only on the RSI, but on the market side B, okay? We have high rising prices, decreasing momentum, bearish divergences, indication of weakness. And finally, guys, we have a touch of that 50 EMA. This is going to be the trigger point. If we lose that 50 EMA, it is going to result in a cascade effect of this uptrend being broken. From a technical perspective, the trend strength will have been lost. We would have lost trend strength. We will go from strong positive to losing positive strength. All right, at the moment, to define it really quickly, this is a strong positive uptrend. We are in a strong positive uptrend, okay, from a technical perspective, but we have glimmers of weakness. Our glimmers of weakness being these entrants into the Gaussian channel right over here, the retest of the 50. If we drop below that 50, okay, we reject from 28,000, we drop from below 50, we have a uptrend, okay, but it is a weakening uptrend. That glimmer of weakness has now turned into weakness. When does the uptrend from a structural level actually be lost? At what point does this uptrend come over major threat? That is if we drop below 24.4 to 25.2. This is this is a major support. This is a nearly a whole year long support, 327 day long support, guys. If we lose this major support, this entire push to 30,000 will be classified as deviation, just as this drop below 18,000 was classified as deviation, and we would re-enter this long-term chop zone between 18,000 and 25,000, guys. If we re-enter this range, we could ping pong all the way back down, or we could just ping pong around, find support and push back up. So 24.4 to 25.2, incredibly important ranges, guys, if we want to look at the trend. So the trend right now in the daily is weakening. The trend is still up. It is weakening. We are losing strength from the technical perspective. We are losing strength from a structural perspective. And of course, FOMC just around the corner could be the ticking time bomb to set it off. But if FOMC comes out positive, all this info, all this weakness is going to be ignored. The price will still go up. Right now, really quickly, we have decreasing volume. We have decreasing momentum. We have decreasing liquidity. Okay, we have decreasing speed, decreasing velocity. All of these are indications of strength, okay? Particularly the price strength, or the strength of the price action, okay? And the strength of a price action can be used to determine the trend. We use technical indicators to determine the strength, okay? And technical indicators are derived from these characteristics of price action, such as momentum, volume, liquidity, speed, and velocity. So we define some of these characteristics, and we look at these characteristics on a chart, and we monitor these characteristics, we can see what the strength of a trend is doing, and more importantly, what the probabilities are going to be for future moves. And that is exactly why we've sold at 30,000, because although at the time, the price was above 30,000, it looked great from a high time frame perspective, we saw the weakness before others did. We saw the weakness in the chart because we understand how to use technical indicators, we understand how to derive price action, and particularly the characteristics behind price action. We know how to assign probabilities to those characteristics and thus make the best possible decisions we can. Not the correct decisions, but the best possible statistical decisions we can make that puts us in the advantage or gives us an edge over the market. You're not always going to be right when trading. You're right around 70% of the time at best with technical analysis, but that still gives you a massive edge over every other market participant who is just FOMOing in, jumping into shit coins, or doing whatever. Short-term price action, let's get into it because we have seen that crash. In yesterday's video, we were discussing the short-term temporary support around over here. We lost that level, we reached our target. Our target was, of course, this next lower support. This is a key level. This is a $28,000 level right over here, that POC level, that level of control. As you saw on the higher time frame, if we lose 28,000, guys, on the higher time frame, our VRPV starts to drop off. You can see on the right-hand corner, this blue and yellow zone starts to drop off, so it enters a lower resistance range. If we're entering a low resistance range after ejecting from a major higher time frame horizontal resistance from the downside, that is strength to the bears. That means that we're going to see downward strength. This is not a good thing for the bulls, and we could potentially see a continuation. Currently, we have a short-term uptrending support line, which could currently save us. And again, this is the technicals, this is the price action. The economic data, before we move forward, the economic data comes out can completely shift, alter, change all of this. It doesn't matter what this says at the moment. Trade it for now, but when the economic data comes out, we'll have to do another analysis, because whatever the economic data is, it can either exacerbate what we're seeing in the charts here, or completely flip it on its head and push the price back up or down or whatever, depending on the data. Economic data, or data as a whole, is more important when it comes to determining direction than technical indicators or structural analysis. Structural analysis tells us where the price could end up bouncing from or ejecting from. Technical indicators tell us where the price could go. And economic data tells us what the price is going to do. Okay, very important. The do is always going to be better or more efficient than any kind of predictive method of analysis out there. Okay, Economic data takes precedence over everything else. So when we're looking at doing a structural or technical analysis, the economic data could tell us what the price is going to do, but our technical and structural analysis will tell us where will the price end up when that certain event occurs. And that is why we do this kind of stuff. It's both relevant, but economic data could flip it on its head. We have a current support level between 27,700 or 27,800 and 28,000. If this level is lost, we can expect a move down here. Now, not only can we almost validate that move, we can almost confirm that move because, again, we have lowering support over here. We have weakness in the trend. We have weakness from a technical perspective, which we'll talk in a second. But we have the price pushing quite aggressively through these supports. Not only that, we have overall weakness on the higher time frame. And again, we're entering this lower resistance range. So if we do lose this lower support that we're challenging right over here, we could see a move down towards this level. This is where it gets very dangerous, guys. If we lose 27,000 to 26,800, that is when we enter that strong VRPV gap according to the small time frame. Take a look. Look at this gap. This is a volume gap. This is a resistance gap, meaning the level of resistance in here between 26,800 and 25,200 is almost inexistent. What does that mean? It means volatility will rise. It means liquidations will rise. It means speed and velocity will rise. What does that mean? The strength of the price action will increase, but it will be bearish strength, guys, because we're breaking downwards through a horizontal support. So bearish strength will increase and the price will push aggressively. Watch that level, guys. If we break through that level, whether it be due to economic reasons or due to price just developing, it is going to be bad. Short-term time frame, we have come down. Sorry, the video is going for quite long. We have retested a major uptrending diagonal support. This uptrending diagonal support is one of two I'm going to show you today, and this is the short-term one. If we lose this level, we are going to be continuing back down. Okay, we are going to be continuing back down. We are not creating highs over here. We're actually creating higher lows. We overall still have weakness in the trend. We'll come look at it in a small time frame in a second, and it is not looking ideal unless we see a significant bounce that really starts to push us over 28,000 on like the 4 hourly, on like the 5, 6 hourly, the higher time frame hourly charts, and we start getting these closes above 28,000. Until we start getting these hourly closes above 28,000, we're not going to see enough strength to really push that price upwards. That doesn't mean you can't scalp it. There were some really great long opportunities that we actually took today from these low levels over here, scalping all the way up to 21.8K. However, if we want to see the trend fully revert from this downtrend, we need to start seeing the price reclaim 28,000 and push up. If we want to see the price completely push back upwards and, reclaim these high levels over here, we need to see 28.6K reclaim. 28.6K, guys, is the most significant bullish trigger right now, okay? We need to clear this level. If 28.6K gets cleared, the price will continue, my bad. Wasn't meant to do that. The price will continue upwards, okay? 28.6, watch it for bullish trigger on the higher time frame. Smaller time frame, 28,000 bearish is going to be that diagonal trend line. The other trend line I wanted to really quickly show you guys before we move on is, of course, going to be a little bit of a higher time frame trend line. Now, I don't apply too much significance to these high time frame diagonal trend lines. I prefer my horizontal trend lines, and as you should, horizontal levels are always going to be more significant than these diagonals. But what we can see is a breakdown of this diagonal here and a potential support resistance flip. And again, where does this support resistance flip really occur around? It occurs around 28,000. So we do need to see that price push above and start closing above 28,000-ish to see any sort of strength. Until then, we do have this overall downtrending strength. Let's go back to the small time frame, guys, and go to like a 15-minute chart, really talk about the micro price action over here, and then we'll go ahead and do a TA and finish up the video, and we'll leave you guys to it, and we'll catch you guys tomorrow again. So what are we seeing over here? We're seeing a bit of a mess, I'm not going to lie. The price action is really in this aggressive downtrend. It's very likely this downtrend is going to almost continue unless we get above 28,000 again. Again, like I said, economic data can completely shift it, but again, we are at support. So we have diagonal, we have horizontal support. Your bias should be more neutral right now, but your high time frame bias should be a little bit more towards that rejection. Again, your bias should have flipped a long time ago. If you're only flipping, bearish now on this high time frame trend, you're late. You're very late. You should have done so around 30,000. So don't say to me now, after it goes back up, if it bounces whale, you're wrong. No, guys, we sold at 30,000. We were correct, okay? We've been playing this perfectly. Currently on the smaller time frame, guys, we do have this weakness showing. We do have a little bit of weakness showing, again, from a price action perspective, losing its major supports, but of course from a technical perspective as well. So let's go ahead and do a quick TA on it and then finish up the video. So here we're looking at the RSI. Of course, we have rising RSI, decreasing price over here. This is a hidden bearish divergence from top side down. Obviously, again, a signal of weakness. On the structural level, we can see that there's downtrending resistance here. We did actually temporarily break out of its downtrending resistance, but it didn't lead to anything. And this is another sign that the bears are really in control. We had this falling wedge structure. I'm going to go ahead and draw it in, where this falling wedge structure over here. We broke out of the falling wedge structure. We saw a little bit of a push upwards to 21.8. We didn't see any sort of strength really developing from that diagonal break, which again signifies how much bearish strength there is in the market right now and how much this price is getting pushed down. So for this to flip, break over 28.1, break over 28, break the 50 EMA, see a push upwards, not going to expect any sort of rally higher unless 28.6 breaks. So 28.6 breaks, sure, we can expect a move back up to 21.9k, 22.2k, sorry. Until then, expect the trend to continue downwards over time. And again, it's going to most likely do that until FOMC comes out. Thanks for watching, guys. Let's go over one more thing. This chart over here, another really interesting thing on the monthly chart is we rejected from the upper band of the Gaussian channel right at 30,000. All of this stuff lines up perfectly. Keep your eyes on this. If we want to see the strength of a trend return, we need a monthly close over 30,000 and of course the price action to break through this Gaussian channel. I am by no means expecting new lows, but as I've been saying, I swing trade Bitcoin. I don't hold Bitcoin. I trade it as per the data and the trends. We bought here, we sold here. We will look for new entries at 25.2 to 24.4, or we will look for new entries if we get a monthly candle close above. Another scenario I want to talk about really quickly before we end actually is if FOMC comes out very positive, the price pushes upwards. Our next target upwards, if the price comes out very positive, FOMC comes out positive, is going to be 31.7 to 32.2. We could see a swing high before we get that rejection. That is definitely possible, something in the back of the head, but we'll see that miles before it happens in the price action. Thanks for watching. Sign to the Crypto Academy. Contact us for more information. 10-unit course to teach you how to trade. Everything you need to know to learn TA. If you're a new person here, if you're beginning to trade, if you're beginning to do technical analysis, structural analysis, this will provide you the essential basis of knowledge you need to build upon and grow as a proficient and educated trader. If you do not learn correctly at the start, it is much harder to unlearn the incorrect methods, especially when it comes to trading, because trading has so much to do with your mindset and your psychology. It is so much harder to unlearn things that you aren't even consciously aware you are doing incorrectly. So learn the correct way. Go ahead and join us. Thanks for watching. See you tomorrow.